Hello, everyone. I'm Hal Levey at PYMNTS.com, and I'm here once again with you. And I am joined by a pretty full house today. I'll go around the room, the virtual room, and introduce our panelists. We're discussing 3DS. And without any further ado, here we are with Jeff Hollenbeck, who is Head of Financial Partnerships at Porter, Aaron Steinitz, who is Senior Vice President, Enterprise Fraud Policy and Governance at M&T Bank, Anirudh Nala, who is Head of Product at Payments and Fraud at Hopper. And we also have Andy McHale, who is Senior Director of Product and Market Strategy at Spreedly. So we have all stakeholders across the ecosystem and certainly well equipped to discuss 3DS. Thank you for being with us and welcome. I think the first
Thanks for having us.
We're happy to have you. The first thing we'll get is let's get a market view for a minute. 3DS is not mandatory here. It is in other places, as we all know. It is a market-driven tailwind that will ultimately determine how it takes root. And I'd love to go around the horn a little bit and discuss your thoughts on why has there been a reluctance, for lack of a better term, to embrace 3DS in this type of market because there's no regulatory mandate to do it. And I would suspect we haven't seen the uptake we might have seen in any other environment. So who would like to start with that?
You know, when I look at why hasn't it expanded farther, I think both on the issuing bank side that I represent and the merchant side, I don't think we've been able to get the value out of it in its current form. As I look at 3DS transactions from an issuer perspective, I look at that as primarily a vector for fraud. I see more activity come through that channel as fraud. And I suspect, and the panel can jump in here too, is that there's a certain level of, if a merchant processor is viewing something as possibly risky, they may channel it through there because the expense of 3DS versus a traditional e-commerce transaction behooves them to move it through that and also get that liability shift. So I don't think anybody's winning currently, which prevents that from being widely adopted.
Certainly what I hear lots of folks talk about in the market is there's kind of a fear of friction in the e-commerce flow. And when you're putting up challenges, people tend to think about that as like being a bad thing and impacting negatively their conversion rates in places where it's not mandated. I think there's some lack of awareness around some of the non-challenge flows that 3DS supports, like data only or the frictionless challenges. But also just exactly what Aaron was pointing out. I've also heard people in the market talk about using it only on their risky transactions. So in markets where it's not mandated, there's a little bit of selection bias on higher risk traffic, I think, that goes through that.
You're right? Merchants look at it and go, why would I risk abandonment on a good transaction? I'm scared of that. And I think a lot of that comes from 3DS 1, where challenge flows were terrible. There was a huge abandonment problem and customers weren't used to this world where they had multiple devices, they had to pass challenges. The challenge flow might be a text, it might be an email, it might be call customer service at the bank. So I think that has led, to a lot of hesitation on trusted transactions going over 3DS, which then results in only high risk at 3DS. So I think in order to, make people like Aaron feel better about 3DS and actually treat them as real transactions, not just junk, merchants have to be willing to blend. Right? You can't just send super high risk stuff to banks. But that hesitation, I think it really stems from that historical failure of 3DS 1.
So to add to your points, right? Absolutely. From a merchant perspective, we want the most frictionless customer experience. Obviously, we want to combat fraud and we want to reduce our chargeback rates, etc. I think personally for me, I think a lot of merchants, they obviously see what they have, their 3DS solution in Europe, the abandonment rates, right? So, but also beyond that, I deployed 3DS from 2017 when the first mandate came out, got postponed, right? The the rollout has not been seamless. There's a lot of issues and a lot of issues also on the tech stack on the issuing bank side, the ACA side and the processor side, right? I always wonder, and I'm always hesitant, like, hey, it took like 5 years for a mandated market like Europe to sort of like come to a steady state, like in terms of the tech stack working. How it is in the US, right? So for me, that's also a very concern, like the state of adoption of the tech stack, and like, is it like ironed out in all the different value chain, right? In the US, so that's like definitely a big part of my hesitation as well, given seeing what happened in Europe. And yeah, absolutely. I think like when it is not mandated, we want to be strategic in terms of where do we want to deploy 3DS. And I think that's where the challenges come in. We obviously deploy 3DS in the risky transactions because that's where we think about recovery. So if it's a good user, we're like, hey, why should we? Because there is a friction, and we're also not really sure about how the entire ecosystem will take in. So I think there is a lot of hesitation from our side, and we actually deploy it selectively where we can actually help in recovery and recover some of the declines.
I think that's an opportunity too, though, right? I look at the difference between an unregulated market and a market like Europe. The issue that I had when I deployed 3DS in Europe was that I didn't get to choose. And I was at the mercy of banks and ACS providers who were terrible, and they had bad challenge flows, or they challenged every single transaction, or there were processing errors, like you mentioned on the early days when the rails just didn't even work. I had no choice. I had to push all of my traffic down this rail that didn't work. Whereas in an unregulated market, I get to choose. Hey, this bank has a great flow. They're frictionless. Their challenge flow is great. Their cardholders respond. They have good rule sets on the other side. Instead of just having to send everything down every rail, I can say, this bank's good, this bin's good. But being able to do that work in the background and figure out which bank is there and ready and actually doing a good job with this, that's to me the challenge in an unregulated market is you have a lot of analytics and data science work ahead of you to figure out which path actually works, and it's going to bring revenue to your business.
I want to stick on two words that are popping up with regularity here, and two concepts. I mentioned earlier, you get, to Jeff's point earlier, there's choice, one. And then earlier it was mentioned using this strategically. So I'd like to, in the context of those two thoughts, to have choice and deploy this and use it strategically. What does that look like? And maybe Aaron, you want to go here. If you're looking at how you would use 3DS strategically as part of a toolbox, even with what some of the issues outstanding that you've been mentioning earlier have been, how do you start to think about where it fits strategically? Okay, and then I want to get to the idea of when you choose to use it. What are your thoughts there?
Yeah, so I think I'll start with strategically. I'd like to use 3DS more regularly because the more signals, the better. Taking just an authorization, trying to make a decision is always difficult. Adding 130, 140 signals to that and device analytics is great. I should be able to target fraudulent activity more effectively. But what I think we're starting to see, and we see this in our digital platforms a lot, fraudsters are able to social engineer customers. OTPs are, almost the way of the dinosaur at this point, but still widely, in existence as an authentication method. And in the current, at least from a strategic perspective, our stack is separated between authentication and authorization. I have two different rule sets deployed. And what I end up losing there is, instead of using all of that new device level data that I can now acquire, I'm using that to make a singular point decision. Then I'm passing it for authorization and making another decision that's going to start to use customer behavior more effectively. In my future state is, how do I blend those into a seamless singular decision point where I can take not only that device analytics, but I can take customer behavior, and I can take the things I know about that customer's digital profile from our web banking platforms, anywhere else that we're deployed, and use that holistically.
Just adding
and then,
on.
Oh, sorry, I was just going to finish one thought, I think, too, based on your question around, what am I doing now? I think, and how am I going to route traffic? I don't necessarily have a choice in that. That's on the merchant and what they send. So if they send it 3DS, they're going to get a different experience if they sent it unsecured e-commerce. Sorry, Andy, go ahead.
No, I just adding on to that and kind of how getting back to your point about strategic use. Jeff and Andrew both said it very well, where in the EU, when the regulated market came in, you had no choice, right? You had to do it. And so the market reacted to that with just get up and running, right? Get basics in place, kind of do things. And where we're seeing things now is strategically thinking about how do you optimize that further? So using some of the other things like data only or frictionless flows, but also exemption management, other ways that merchants can find ways to use 3DS, but not have to put the friction in front of the customer and still be able to pass a lot of that data that Aaron was talking about downstream to the issuers so they can make informed decisions about the transaction.
I want to stick on that too for a moment, and I want to get the merchant's perspective here. And if we were to ask you, where you can start to introduce some of these, there's better data, there's a device, there's to that point just a moment ago, where you manage exemptions, how ultimately this flows through to a better customer experience. I think sometimes, I think there's a prudent management of all of it, and then there's the ultimate outcome. So when you're thinking about what the customer experience could look like with all of this flowing through the transom, tell me a little bit about, and if you give us an illustrative example, maybe, and we're talking about the exemptions, maybe to that point, what does that look like to you?
Yeah, no, absolutely. I think from a merchant perspective, it's obviously all about abandonment and declines, right? So for transactions where it's gonna go it's gonna be successful on authorization level, obviously we want to reduce our fraud chargeback rates, etc. So I think data only in those cases is a great product, right? So obviously it's in your toolbox, you already have deployed it, how 3DS works, it's already in your system. It's kind of like just an API flag, and you can actually start doing data only, which actually boosts your authorization rates and helps with some of your chargeback rates as well. So yes, absolutely, it's frictionless, works great. Now, I think the other area which we do use 3DS is more of decline recovery, right? So when we do get a decline in terms of a fraud or even insufficient funds in certain cases, can we actually verify that user, right, and then push it through again? We also do that with Apple Pay, for example. If we get a decline, we actually say hey, why don't you try with an Apple Pay? And a lot of times we actually see the transaction goes through. So we do use 3DS, Apple Pay, and other payment methods strategically from a decline recovery perspective, because at the end of the day, a customer has come to check out, they say they want to pay. Someone in the system says, sorry, you cannot pay for whatever reason, right? And then we want to give our customer an option to actually be able to go through that process. So whatever that is, so on 3DS is one of those, that's for decline recovery, but we also use other potential opportunities to basically complete the transaction.
I want to discuss a little bit about what goes on in the background, and this is for Jeff and for Andy in particular. When we talk about some of the things, the idea of, and I know, Jeff, we've spoken before of the idea of intelligence in the mix, and the intelligent application of 3DS, and I think for both of you, we can discuss some of the connectivity and payments optimization. Nothing really works perfectly unless payments are optimal, right? Certainly we're talking about that end moment, the transaction gets done, there's minimal friction in the mix, but it's done intelligently. So what does that concept look like? And then the execution of connecting it all. If you guys want to chime in, I'd love to hear it.
Look, I think the reality is e-commerce payments has evolved a lot in the past 15, 20 years, where the number of choices on a transaction is exponential. Anirudh just mentioned decline recovery, right? Even on a decline, there's lots of choices. Which processor do I send it to? Is cost more important than authorization rate? What kind of decline did I get? Is it a token? Is it a PAN? We look at that from a from a risk perspective, and Forder's position here, I'll let Andy kind of talk about, routing. That's really what Spreely's core is and how they help merchants. So I'll leave that alone for a second. But from Forder's perspective, we look at which path allows an issuing bank to have the most trust in a transaction. That's what we believe is key. If an issuer has the data they need to trust, they're going to maximize your risk approval rates. And that's what we want for our merchants. So Forder's model, right, will tell you as a merchant which path is best for this transaction from a risk perspective. Yes, we make a great risk decision, but we also optimize the path that it goes down. The problem without a model, in concept, that's easy, right? But without a model, there's just an enormous amount of bins, banks, and every bank has a different portfolio with a different engine behind it. It is literally impossible for a human to go in and tell you, write a rule that says, if this, then this. It just can't happen. And so that's where we believe that, machine learning, AI, great data models, that's the value they add in this equation. Is you can't do it yourself. You can try, maybe for the top 5 banks in your portfolio, you can pull it off with a lot of human effort, but you're never going to get to the tail end. So adopt technology, bring in ML. That's what it does best.
Yeah, agree. And it certainly a rule like a heuristic rule strategy doesn't scale, just like Jeff was saying, and is really complicated to manage. What we see a lot of our customers doing from an orchestration standpoint is optimizing their payment stack around not just uptime and reliability and sort of like resiliency, but how they're optimizing their cost structure, as Jeff was alluding to as well, and optimization. So if a merchant's operating in multiple regions globally, they may want multiple gateways in those regions so that they're not paying cross-border fees or other kinds of things that they're trying to optimize on interchange, but also authorization rates. And that's where we see tools like Forder helpful in optimizing when and where to do 3DS, and knowing if a certain region is going to have a higher authorization rate with a certain 3DS type or check, and giving the flexibility across a lot of different connections to optimize things instead of having to if then else 1,000 rules to do that.
One of the things with data, I'd like to delve a little bit into the data points that matter. I'd like to toss this over to Aaron for a moment. So, with all of these different data elements in the mix, I think the number earlier was 150. Name it. Certainly, they could. You can parse which data elements matter most urgently. I'd like your thoughts on that, and I'd like that same. I'd love Anirudh for you to give us your thoughts there too. What data points matter at what point in time, and does that change depending on certain types of transactions or even who is transaction?
Yeah, so let me artfully not answer your question directly. I don't think there is a point in time signal that is the signal. I think Jeff, was speaking on it around, machine learning and modeling. I think the whole point is if you're looking to build based on individual elements, you're never going to get there. It's taking the amalgamation of all of those different elements with then additional data elements around that customer's behavior, spending patterns. That's the way to get high approval rates, low fraud rates. There isn't going to be that one, and it's constantly evolving, and it's not at a human level where you can watch it. And the dollar amount is key today, because we've seen it, on the issuance side. A fraudster will start at $1,000 and then go down to $5, and then $4, and then $2, and then they'll go down to $25. With volume, you're still going to make money, and it's not yours. So I think it's all about using everything, not looking at individual signals as better or worse than the others. It's the whole environment.
Anirudh, your thoughts on data that matters, or a customer profile that matters, or type of transaction? What are your thoughts there? To that point, the fraudsters will winnow down or triage how they need to. What are your thoughts there?
No, absolutely right. I think it depends, right? So improving, classic payment metrics. You want to improve authorization rate, you want to reduce your cost, and you want to reduce your fraud rate, right? So some of them are a bit more straightforward and rules-based, right? Like if you think about like reduce cost, I think it's a bit more rules-based, and authorization rate, I think it's a kind of between of like rules-based versus like maybe some kind of like smarter algorithm over there, but it's closer to more rules-based, right? When you're thinking about fraud reduction, I think that's where obviously like I think where you need to take into a lot of different data points and considerations and work with providers, have a score. So yes, absolutely, that is important. And I think like it depends on your strategy. And for some of the strategy, I think you just keep it simple. I don't think you need to have a lot of data points. Like simple rules-based work, especially for cost optimization, right? I don't think it's super complex. For fraud, yes, I think it's complex. You need to look at a lot of data elements. So I think it really depends on what you're trying to achieve, what is your KPI, and sometimes you don't need to over-engineer things. Sometimes simple does it.
I wonder if we could also discuss this, where we are now versus where we're headed when we think about how this all fits into the equation, right? We're 3DS version 2 versus where we were a couple of decades ago with the first iteration. Certainly not where we're going to wind up, right? We're not going to necessarily wind up with where what's in place now won't be perfect. I wonder if each of you might have some thought on, we've been discussing the intelligent and strategic application of 3DS. I'd like to get your thoughts about where the market itself, this actual landscape looks like a few years out. Might we be headed, let's go out on a limb, could we be headed to a state of existence where it's mandatory? If not, why not? And then where do you think the best practices approach, not just to security, to governance, but to 3DS in the service of the ultimate experience, obviously to the end user, to the issuer too, where are we headed? Jeff, what do you think?
Yeah, the regulation question is a hard one to answer. No one can guess US regulation. I look at EMV and yes, we followed, but man, we were behind. So could regulation come? Sure. Is it imminent? No. I think more realistically, where we're headed is a world of connected data. If you listen to what Aaron says, and I hear this from a lot of issuing partners of ours, they're connecting data from the ACS to their authorization engine. Every bank is chasing that dream right now. If you talk to the cloud service providers, they are building connected data lakes. And I just think this world where ISO 8583 and its limited data pipe, it will break. And everyone, service providers, merchants, banks are finding their own ways around that right now because data is king. And a world of e-commerce payments to me in 5-10 years, there will no longer be a problem of I have an amount and a card number. I need to make a risk decision. Good luck. Like you will be behind. And whether it's 3DS that leads us there or other technology, I think that world of connected data is coming and everyone needs to get on board. Otherwise, they will be a dinosaur very quickly.
I think there's two parts that come to mind when you talk about that. The first one is, and Jeff alluded to this, is the EMV co-specs, right? 3DS1 was around for 15 years before it was sunset, something like that, a very long time. Now we're hearing with EMV co kind of driving things, 2.1 is set to sunset next year. So they're iterating and sunsetting legacy versions more quickly. So I think there's good progress around keeping that solution from becoming stale. On the regulatory front, flip a coin like Jeff was getting at. I'm not positive about that one. But what I can say is in market, I do see like the card brands, for instance, reacting to the low adoption of 3DS in certain markets with adding on authentication steps to their tokenization suites. Visa's solution is a product called Cloud Token Framework, which is a very similar authentication flow to 3DS and actually offers the same liability shift, but it's more targeted at markets that aren't requiring SCA as part of the transaction flow. So I think we're seeing even the industry react to that regulatory uncertainty.
If data indeed is king, how did that start to inform Anirudh and for Aaron, for each of you? How did that connectivity and that data start to shape where you think things might be headed a few years from now?
Yeah, so chasing the dream. of this unified data set within our institution. There's struggles because not even just around 3DS, but joining activity across pillars here is a challenge, right? But I think really from my perspective, I think our data is going to get better. It's going to continue to grow, and the ability to move that data around the institution or orchestrate it to allow for machine learning and more modeling around that activity is going to grow. But really, back to the last point, I think one of the things that we're going to need to see and grow in the future is more collaboration between issuers, acquirers, merchants, because again, we're going to get stuck in that catch-22 of, I believe all the traffic is bad. I don't necessarily know what the merchant's doing to assess it, because a merchant may become super sophisticated and they've got a lot of behavioral data, and they've determined they're only pushing really good traffic through 3DS. I'm not going to know that. I'm just going to keep thinking it's all bad. So I think we're in a bit of a catch-22, and some of that collaboration that EMVCo, Andy mentioned it. I think that helped to start to bridge some of those gaps, even in a non-regulatory environment. So we're going to need to look at that to really adopt this.
Yeah, I mean, for me, as for everyone in the payment space, I think the dream is basically minimize fraud, right? Zero fraud. So I think we're all sort of like coming up with solutions and tools, sort of like, hey, how do you verify, how do you identify the user, right? So the payment method and the identification of the user is a rightful holder. I think that's what it's sort of coming to. And I think like we'll sort of see more and more like payment methods and payment instruments always come with authentication and identification built in, right? So these are all just different ways of doing it. And I think is it 3DS or something else, eventual goal is minimize fraud. And I think there are a lot of technologies coming up to basically eliminate that and basically bring identity verification and the payment method together.
I think that's a great look forward. A couple of years hence, we've got some stuff in the rearview mirror that informs it. And I think that's an interesting look ahead. So clearly data connectivity and all sorts of, to your point earlier, collaboration, all inform each other to what I think might be an evolution far beyond where we are right now, if AI doesn't kill us all. So, I think we'll be headed towards some interesting time. Folks, I want to thank you very much for the conversation and the interplay and the different perspectives, and look forward to doing this again.